Let us see the calculation details of GDS and TDS. Step 1, Gross Annual Income, S. S equals gross salary of the buyer only, if no other income exists. S equals income of buyer's husband and wife, if they buy together and if no other income exists. S equals salary of the buyers plus rental income from tenants plus any other income, if it is not owner-occupied. S equals salary of the buyers plus 50% of rental income from tenants plus any other income, if it is owner-occupied. From one of these cases, required value of S can be calculated. Note, undeclared amounts need not be used in calculation. Step 2, note down the following carefully. Sales price of building, B. Monthly maintenance fees, M. It is usually there for condo. Annual property tax, T. Annual heating tax cost, H. Ensure to calculate M, T, H for annual amounts. Step 3, calculate debts, credits, and loans. Debts and loans L, any debts with monthly payment. L equals car loans plus student loans plus any monthly mortgages, loans plus monthly child alimony, after divorce, plus any other monthly expenses. Credits, C. C equals 3% of credit card balances and line of credit amounts. Ensure to calculate L and C for annual amounts. Step 4, find D, down payment value. D equals savings amounts planned for down payment plus contribution from RRSP amounts, up to $35,000, by each individual buyer. $35,000 amount limit from RRSP for mortgage, might change as per government rules, time to time. Check for latest updates and for the location to fix the RRSP contribution to calculate D. Step 5, down payment percentage and CMHC. If D by B percent is less than 5%, there is no need of further calculation of GDS and TDS. The client does not qualify for mortgage. If D by B percent is greater than 20%, calculate GDS and TDS. No need of CMHC. If 5% less than D by B percent less than 20%, then calculate for GDS and TDS. But consider CMHC. To use CMHC insurance. 1. Find loan to value, L, V, equals, 1, D by B, percent. 2. Check T, the standard purchase premium percent, from the table. Use this table to find T, the standard purchase premium values based on the loan to value percent. Note, premiums in some provinces are subject to provincial sales tax. The provincial sales tax cannot be added to the loan amount. Step 6, find the PV value. If D by B percent is greater than 20%, PV equals B minus D. If 5% less than D by B percent less than 20%, PV equals B minus D into 1 plus T. Find and note down the values. S, M, T, H, C, L. Calculated annually. Also note D, B, PV. Note down dB and T in percent. Step 7, find PMT and PI. Use financial calculator to find the value of PMT, monthly mortgage payment, using the values. N equals number of years of mortgage. IY equals prime rate of interest. Use the Bank of Canada rate. PV equals present value, total amount of money needed as loan for mortgage. FV equals future value equals 0, to be taken for mortgage plans. Be careful about PY and CY, based on mortgage payment schedule. From the PMT value calculated, find PI. PI equals PMT into PY. PY equals number of payments in a year based on the type of mortgage payment schedule. Step 8, find GDS and TDS. GDS percent equals PI plus T plus H plus half M by S into 100. TDS percent equals PI plus T plus H plus half M plus C plus L by S into 100. If GDS less than 35% and TDS is less than 42%, client qualifies for mortgage. If not, the client does not qualify for mortgage. Note, standard values of GDS and TDS might vary for different provinces. Sample 1, calculate client's GDS and TDS and explain if they will get the bank approval for a mortgage loan. Savings account, $160,000, down payment, salary husband, $120,000, salary wife, $135,000. Sale price, $789,000. The municipal and school taxes are $2,500 annually and heating is $2,500 per year. Mortgage interest, 3.5%, amortization period of 20 years. Car number 1, $500 per month. Car number 2, $500 per month. MasterCard balance, $10,000. Visa card balance, $45,000. Line of credit balance, $15,000. Husband is paying $600 per month for child alimony to her ex-wife. GDS equals 35%, TDS equals 42%. Calculation. Step 1, S equals 120,000 plus 135,000 equals $255,000. Step 2, B equals $789,000, D equals $2,500, H equals $2,500, M equals 0. Step 3, L equals 500 plus 500 plus 600 into $12, C equals 3% of 12 into 10,000 plus 45,000 plus 15,000. Step 4, D equals $160,000. Step 5, D by B percent equals 160,000 by 629,000 equals 20.27%, which is greater than 20%, so, no need of CMHC, since this is greater than 20%. Step 6, PV equals B minus D equals 789,000 minus 160,000 equals $629,000. Step 7, P/Y equals 12, C/Y equals 2, N equals 20 into 12, FV equals 0, PNTE equals $3,639.79, PIE equals 12 into $3,639.79. Step 8, GDS equals 12 into 3,639.79 plus 2,500 plus 2,500 by 255,000 into 100 equals 19.089%. TDS equals 12 into 3,639.79 plus 2,500 plus 2,500 plus 500 plus 500 plus 600 into 12 plus 3% of 12 into 10,000 plus 45,000 plus 15,000 by 255,000 into 100 equals 36.5%. GDS equals 19.089% less than 35%. TDS equals 36.5% less than 42%. So, the client qualifies. Sample 2, a couple would like to purchase an owner-occupied duplex. Calculate the GDS and TDS of the following transaction. In your opinion, do they qualify to get a mortgage loan? Purchase price, $780,000, down payment $45,000, mortgage interest, 3.15%, amortization 20 years. With accelerated biweekly payment option, property taxes, $2,500, heating cost $2,500, credit card balance, $10,000, balance of credit margin, line of credit, $5,000, car loan, $200 per month, salary of the wife, $225,000, salary of the husband, $80,000, annual gross rental income, $12,000. Calculation. Step 1, S equals $225,000 plus $80,000 plus 50% of $12,000 equals $311,000. Step 2, B equals $780,000, D equals $2,500, H equals $2,500, M equals 0. Step 3, L equals 200 into $12, C equals 3% of 12 into 10,000 plus 5,000. Step 4, D equals $45,000. Step 5, D by B percent equals 45,000 by 780,000 equals 5.76% less than 20%. So, use CMHC. LV equals 1 minus D by B percent equals 1 minus 0.0576 equals 94.24%. From table, D equals 4%. Step 6, P, V equals B minus D, into 1 plus D equals 780,000 minus 45,000 into 1 plus 4% equals $764,400. Step 7, P by Y equals 27, C slash Y equals 2, N equals 20 into 27, FV equals 0, PMT equals $1,904.878, P. I equals 27 into $1,904.878. Step 8, GDS equals 27 into $1,904.878 plus 2,500 plus 2,500 by 311,000 into 100 equals 18.14%. TDS equals 27 into $1,904.878 plus 2,500 plus 2,500 plus 3% of 12 into 10,000 plus 3% of 12 into 5,000 plus 12 into 200 by 311,000 into 100 equals 20.65%. GDS equals 18.14% less than 35%, and TDS equals 20.65% less than 42%. So, the client qualifies. Sample 3. Calculate the GDS, TDS of a couple. First-time home buyers. Explain if the client will get the bank approval for a mortgage loan. Saving account, $35,000. Down payment, total RRSP, $15,000. Would like to use it towards the purchase of the property. Salary, $100,000. Sale price of condo, $289,000. The municipal and school taxes are $2,500 annually and heating is $2,500 per year. Mortgage interest, 5.5%, amortization period of 20 years. The monthly condo fees are $100. Use the CMHC premium table. GDS equals 35%, TDS equals 42%. Calculation. Step 1, S equals $100,000. Step 2. B equals $289,000, D equals $2,500, H equals $2,500, M equals 100 into 12. Step 3, L equals 0, C equals 0. Step 4, D equals $35,000 plus $15,000 equals $50,000. Step 5, D by B percent equals 50,000 by 289,000 equals 17.3% less than 20%. So, use CMHC. LV equals 1 minus D by B, percent equals 1 minus 0.173, equals 82.7%, from table, D equals 2.8%. Step 6, PV equals B minus D, into 1 plus T, equals 289,000 minus 50,000, into 1 plus 2.8%, equals $245,692. Step 7, P slash Y equals 12, C slash Y equals 2, N equals 20 into 12, FV equals 0, PMT equals $1,681.49, P. I equals 12 into $1,681.49. Step 8, GDS equals 12 into 1,681.49 plus 2,500 plus 2,500 plus half of 100 into 12 by 100,000 into 100 equals 25.77%. TDS equals 12 into 1,681.49 plus 2,500 plus 2,500 plus half of 100 into 12 plus 0, by 100,000 into 100 equals 25.77%. So, we get, GDS equals 25.77%, which is less than 35%, TDS equals 25.77% less than 42%. So, the client qualifies. If you find this video useful, give your comments or queries. Click like button, and subscribe the channel.